Good evening, this is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Wednesday, the 20th of November. A disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right, let's have a look at what happened on yesterday. Well, we saw a decline in the morning. It didn't make a lower low, and it didn't make a lower low on SPX either, so it didn't really fit what I was talking about in terms of yesterday morning, although it almost made it. But really, it still looks like a bear flag forming. So we saw a decent rally in the afternoon. There was talk that NVIDIA earnings this evening might do us a lot of favors in terms of upside, and that's what happened when NVIDIA reported its earnings. Obviously, they underwhelmed for whatever reason, and so the market did not rise into the stratosphere. Where does that leave us? Well, I think that leaves us very possibly making lower lows from here. We will see. In terms of NQ, didn't make a lower low there either. In terms of RTY, possible. We're forming a very ugly inverted head shoulders here, and we have got 60-minute buy signal fixed, but it is alone. No buy signal fixed on Dow at the moment. This still looks like a bear flag forming as well. And DAX and the STX still bumping along the bottom at levels well below the level when Trump was elected. So nothing really affected apart from the US indices by Trump's election so far. All right, let's have a look at the bigger picture charts. All right, on the ES chart, obviously no divergence. We've been holding the daily middle band for 4 days pretty successfully. We might see a break below it. If we do, then I'd be watching the rising support trend line. Sorry, I need to extend that up here, but I've got that currently in about the 58.20 area. That would not require much of a lower low, and that could set up a very nice looking double bottom on ES if we should see it. No current divergence on the RSI on the 15 minute, nothing on the 60 minute either. On the daily chart, looks exactly the same on SPY, ES, and so on. It's we've been holding the daily middle band, and that could continue to hold. But the longer we hang around here, and the more we form these slight higher highs and higher lows, this looks an awful lot like a flag forming. And often that is because it is actually a flag forming. All right, looking at the cues, we've been holding the daily middle band, more or less, with more difficulty than we've been seeing on SPX, but nonetheless. Nothing really to say on the hourly chart, apart from we're still very close to this rising support. If we were to retest the low, we'd go through it. We're holding this breakaway gap area I highlighted early on. We will see how it goes. I'd quite like to see a retest of the lows on both SPX and NDX to set up nice looking double bottoms. We'll see whether we get it. All right, looking at Dia. Dia, we've got obviously we've just had a slight touch of the daily middle band, but that's been holding like a champ. On the hourly chart, no current divergence, and on the 15-minute chart, this again looks like a flag forming. And we've gone down into the larger breakaway gap area here, but not broken and holding for the time being at least. All right, looking at IWM. IWM, I didn't mark the breakaway gap there, but that runs down to here, so we've not run through that either. This could be an IHS here, not a bad looking one on IWM, even if it's rather fugly on the RTY chart. We'll see how it goes. Do we have a 60-minute an RSI 14 buy signal here? Yes, we do. An RSI 5 buy signal is fixed to made target. We've also got an hourly here, but again, as with the futures, it is a low. All right, looking at DAX. DAX holding under the daily middle band. Nikkei holding under the daily middle band as well. This could still be the head and shoulders here that I was talking about before Trump was elected, but is probably not. We haven't really got into the November bullish lean that I was looking at. I'm hoping we do get into it. We have a rise up into Christmas, because I'm thinking after Christmas, all bets are off. Trump takes power on the 10th. From then, we've got a whole load of potential market movers. It does appear that the Trump campaign trail is being reflected in what he's appointing. We've got a protectionist being appointed to be in charge of trade. A couple of interesting loonies in charge of, obviously, health. One wonders whether he's this is looking like a revolutionary set up for a government, and revolutions tend to be uncomfortable and also often eat their creators. But nonetheless, this is not going to be a status quo. The aim is to overturn the status quo. In many respects, that's not a bad thing. Trump shaking the tree is not inherently a bad thing at all. This is a tree that, frankly, needed to be shaken for years. But obviously, these sort of things can have unfortunate consequences, and one of those may well be, and this is something I was writing about on my Bigger Picture post, Strange Days on Treasuries. One of them might be that we get a bond crisis next year, because the US is so very heavily indebted, and because really to continue being that indebted, you need the confidence of the bond market. This is something which has affected other countries on a regular basis. It's and it affected. It was one reason why a prime minister in the UK was forced out after about 3 weeks. And it's something that could very much affect the US as well. The bond market, at the end of the day, is king. If you want to run with large debts, then you need the acquiescence to do so. And it might be that we're going to need a bond crisis before that lesson is truly learned. We will see. So next year, we could see a lot of turbulence. If we're going to do any topping out here and do higher highs, we therefore need to probably do it this year. So we shall see. All right, let's have a look at the DX chart. Sorry, CL chart. CL is trying to break up for a double bottom here. We've got a weak 60-minute sell signal fixed, and we're just moving sideways at the moment. Keeping an open mind, but we're not rejecting down hard enough to suggest that this is failing so far. NG is breaking up. We haven't even switched over on volume into the January contract yet, but although that is likely to happen any day, so we will have a look at this on the bigger picture chart, and let's do that now. All right, let's have a look at CL. CL, no current divergence. Bigger picture, we're looking at a triangle, and I've still got a target in the 63.57 area, and I'm not seeing any particular reason to think that isn't going to make target. It is struggling at the moment of the daily middle band, and if we're going to go higher and make that double bottom target, we're going to need to break above it. All right, looking at NG, again, no current divergence. This is a breakup, but it's also a breakup which has taken us over the daily upper band at the moment, and we're going to see a spike up like we saw here when we saw this was the winter opening gaps. Whereas he switched contracts, this was 50 cents, this was 30 cents. I think we're going to get another 25 cents on this one, maybe 30. And that's going to switch over to another day or two, and that could get us back up into this 3.64 area, which is potentially double bottom resistance. But I would say this is the last big gap up in terms of rolls on NG. Basically, we're looking at the rolls heading downwards into April from here. So we'll see how far this gets. 3.64 is a big resistance area. If we see a sustained break above it, then potentially that is opening up targets in the 5.2 to about 5.6 area. But obviously, it's got a fair amount to do before we would be thinking that was actually a credible target. We shall see. All right, let's have a look at GC. GC, we've got nice little rally here. 6-minute sell signals fixed, hasn't really delivered anything so far. We do not have any pattern targets above, and on the dollar chart I'll be talking about, I'm expecting to see a retest of the high there. We will see. SI is broke up slightly over this resistance here in the 31.25 area. This looks like a bull flag forming and is suggesting a retest of this high. 6-minute sell signal has reached the possible near miss target. HG, this looks like a bear flag forming, setting up a retest of this low. So mixed messages on metals at the moment. Let's have a look at those on the bigger picture. All right, GC. GC No current divergence, and I was thinking if we saw a bit of a rally and a retest, then we could set up a daily RSI 5, but buy signal, that clearly isn't going to happen. And it's not going to happen on the index either. We're coming back up into the daily middle band area. I've got that at 26.88, and we'll see how it does when it gets there, but I think that might well be the end of the rally. We will see. So looking at silver, because not least I'll be coming to it, but I don't think the dollar is necessarily finished going up. It's okay. We've got an RSI 5 buy signal fixed on SI. Just checking. Yeah, we've definitely got one fixed. Well, not the strongest of divergences really, but nonetheless it's there. It's fixed, and that is suggesting we're going to see some more rally. Again, we've got the daily middle band above. I've got that at 32.11, and it hasn't reached it yet. Looking at the index chart, could this be a head and shoulder, right shoulder forming? Probably not. It's not looking particularly pretty, but maybe. But I wouldn't. It's certainly not the direction that my thoughts are leaning looking at the chart. Looking at palladium, we've seen a nice little rally, but I'm thinking we may well go lower afterwards. On platinum, we've seen a nice little rally, but I'm thinking we may well go lower and retest this low afterwards. Looking at copper, no current divergence, again a nice little rally, well short of the daily middle band. Daily middle band on the index is at 4.27, and we closed today at 4.16. We've got obvious resistance above to get over that, and I'm thinking the obvious setup looking at the futures is that we're setting up a bear flag and we'll probably retest lower. Looking at GDX, no current divergence on the daily chart, same as GDXJ, and nothing in terms of divergence in the short term. Actually, a little RSI 5 sell signal fixed on the hourly chart, but not a lot really to be working with. All right, let's have a look at DX. Now, DX, so ZB first. Okay, ZB, we've got what could be a little flag here, but on TNX, I've got a potential double top here. I was thinking this might deliver a good rally. I'm wondering that now, particularly because on TNX, we're starting to break up from the flag. We'll see. But we do have supportive sell signals on TNX on the daily, suggesting that we might see a rally here on ZB. I'm just a bit surprised we haven't seen that already. Looking at US dollar, I've been looking at this as a likely flag forming, setting up a retest this high here at 107. We haven't seen that retest yet, but I think it's coming. Let's have a look at that on the bigger picture chart. All right, DX, as soon as we retest the high here, we've got possible daily sell signals running on the RSI 14 and the RSI 5. That could deliver a decent move, certainly the RSI 5 one, which is the main one I'd be taking notice of. Already actually technically got an RSI 14 sell signal here, but it's a nice confirmation to get another divergence, and it would give us an RSI 5 sell signal, which is actually important. It would also set up a potential double bottom. Will it turn there? Well, that's a good question. I don't have any obvious trendline resistance here, but we are up in the resistance area where we have found resistance before. 107, 107, 107. So possible we see on that. If we head up into this trend, head up into this trend line here, I've got that in the 109.4 area, and that is a possible too. The other thing to suggest is that we may find that we see a lot of turbulence on the dollar over the next couple of years because of the upset of the status quo. Is it possible we could see a retest of 114.75 to set up the second high of a double top? Maybe. At the moment, it looks like a stretch, but it's something I'm considering. If we can get over 110, I'll be considering it seriously. But I'm just throwing it out there as a possibility. That could well be interesting if we do see it. All right, looking at TNX. TNX on the hourly chart, not really a lot to say apart from we've got a potential double top here that hasn't been doing anything. On the daily chart, RSI 14 sell signal fixed, RSI 5 sell signal fixed, and we're breaking up slightly from this flag. I think this is going to retest 49.97. By the time we got down to 36 here, I was thinking that probably wasn't going to happen, but at this stage, we've got most of the way there already. And we've got a nice looking bull flag, and it's starting to break up. I think it's pretty decent odds we are going to retest that. In which case, that will bring us to an interesting inflection point where potentially we could break up from it. Not really thinking that's hugely likely unless there is pressure from government policy. Now, that can come in a couple of forms. It's nothing to do with the efficiencies and whether they slim down the government, etc. It's actually all about trade and borrowing. It's trade. Tariffs could put up inflation. Tariffs in any large scale are going to put up inflation. That could have a response of higher interest rates. And the other thing is, if there is no real, if there are plans to increase borrowing and keep borrowing high and to increase the debt beyond the current level at about 122% of GDP, then the bond market is going to be wondering whether or not it's going to get its money back. It's not generally a good idea for the bond market to be thinking that. And actually, in terms of debt to GDP, US is now ranked number 16 in the most indebted countries in the world. That is not a good situation. And it's one where you've got to be very careful with the bond market's opinion, because if you get on the wrong side of them, then very bad things can happen and interest rates can go up a lot. The national debt is 37 trillion. Every 1% the government's cost of service goes up is an extra $370 billion a year, which needs to be found just for the interest. This is the big issue. And if we get turbulence on this front next year, then we could see a bond market crisis, we could see major equities turbulence, and we could see a collapse in the value of the dollar. These are all options for next year, which will be a very, very interesting year to watch, but might not be that quite as comfortable to live and work through. We will see how it goes. All right, so that's where we are. I think we're probably going to retest that. All right, let's have a look at the other commodities. I'm going to be doing, by the way, some Christmas posts talking about the big issues I think that might come next year. We should have more light shed on the future Trump administration's direction, and I'll be talking about that. But this is going to be a more inward-looking America, which is less concerned with the status quo. That's going to have a big impact. It's been a while since we saw an America like that, since World War II, really. It's last time we saw in America really directed inwards rather than outwards was really probably the 1920s and 1930s. We'll see how that goes, but I think it could have an awful lot of interesting implications in the world outside. All right, let's have a look at KC. KC has made a higher high here. I was looking for a trend line which was in about the 288 area. Obviously, we went through it. Not seeing anything compelling saying this is a double top, but obviously it's retested the high and gone marginally higher. This could be a double top. SB hasn't broken up from the flag yet, but this should be. We've had 2 months basically of sideways bullish consolidation. I'm expecting this to break up. CC almost retested the high, but not quite today. This could be a double top, leaning towards this heading higher. Looking at ZW, nice little rally, and we've seen a nice rally on corn too. Sorry, that was CT actually. It's CT rallying off the lows. Probably going to head lower afterwards, I think, but keeping an open mind. ZW, nice little rally here. Looks like a bull flag forming, and ZW on corn, we've already seen a decent move up, which has almost retested this high here in the 435 area. That may well go up higher and set up a double top, although it may just continue higher from there. But I am wondering about more downside on grains. Not much of a rally on soy, and I'm leaning towards seeing lower here, which I'll be talking about on the daily chart. Looking at lumber, lumber pausing a bit, but looks at the moment like a bull flag forming. Live cattle broke up from the flag, and I'm leaning towards this seeing a retest of this high here in the 190.5 area. Looking at lean hogs at the moment is broken back above the monthly pivot, broken back above the weekly pivot, and maybe rejecting back towards the high in the 86.875 area. All right, let's have a look at those on the bigger picture charts. On KC, no current divergence, and actually we could easily have set up negative divergence here, and it hasn't. We've gone through the trend line I was talking about. At the moment, it's not particularly obvious where this might be headed, but we could most definitely go higher. On sugar, Looks like a bullish consolidation, very like a bullish consolidation. I'll be surprised if this doesn't break up into a retest of the high. On cocoa, no current negative divergence, but as soon as we retest this high at 87.83, we will have some on both RSI 5 and RSI 14. But I am leaning fairly strongly towards seeing a retest this high here at 89.98, and we've not reached it yet. On wheat, no current positive divergence. Not seeing a bottoming pattern either. I'm leaning towards, at this stage, really seeing a retest this low here in the 520.60 area. Looking at corn, no current divergence. Consolidating a breakup. This could all be a bear flag forming, though, at the moment. Keeping an open mind. It doesn't have to be, but it might be. Looking at the soy chart, weak RSI 14 buy signal fixed, not really delivering anything so far. This double bottom broke up and looks like it's failing so far. I'm leaning towards seeing a retest of this low here at 973.40. On cotton, no current positive divergence. See a retest of the low, and that will change on both the RSI 14 and the RSI 5. If we could also retest this low here at 67.90, we could get a very nice looking double bottom setup. So I'm leaning towards that happening. We'll see how that goes. All right, great. In that case, I think it's a wrap. I'll catch you guys again on Sunday, and I'll have this posted ASAP.